Okay, in this video, we're just going to describe quickly what's frequently referred to common size statement analysis or vertical analysis and horizontal analysis. So let's first look at common size statement analysis. The common size statement analysis for income statements essentially takes each line item and divides it by net sales. So in this case, you can see the cost of goods sold is 58 in 2017 is 58%, 56%. Let me make that a little bit bigger so you can see it better. 56.51% of sales. So essentially what that means is 56.5 cents of every dollar of sales goes to the cost of goods sold, which then means 43.49 cents of every dollar is what's considered gross profit. If we follow down the line items, we can also then see what the relative line items are with respect to sales. So if you go down here, earnings before taxes, the profit of the company before we've calculated taxes is approximately 12.56%, which again means after we've paid for all of the operations, after we've paid for financing, the company still has left over 12.56 cents for every dollar of sales. And of course, in the end, we see that their net income is 12.85 cents. So of every dollar that comes in, 12.85 cents is left over that can be used to pay dividends, can be used to increase investment, etc. We also can then just provide some averages. So it appears that the cost of production for, in this case it's Coors, is around almost 60 cents of every dollar goes to production. They spend approximately 4 cents of every dollar goes to interest expense. So again, this gives us some insight into how the company is performing with respect to these line items. With respect to the common size balance sheet, again looking at the concept of a vertical analysis, all the line items here are divided by either total assets or total liabilities and equity. So in this case, you can see that the company has, I'll just go over to the averages, about 2.8% of their assets are cash. You can see that 65.6% is intangible assets. Now, let's think about what is an intangible asset. This is telling us that almost 2/3 of the assets of Coors are things that you can't touch. It's trademarks, brands, goodwill, a variety of other assets that you can't touch. Only about 15% of their assets are actually physical things. If we continue that analysis down below, see about 12% of the assets are current liabilities. Total debt is about 50%, which then obviously means the other 50% must be equity or stockholder equity. We can also see the what of the total assets of the company. Around 74% is, on average, is common stock. So you can see that in general, this company has, relatively speaking, they have a great amount of debt. It's about half of the company is debt. We also can see, relatively speaking, how the company is financing its operations. So another way to think about analyzing this, and I refer to this as something a little bit different than some other sources, but I just refer to this as the percentage change statements. This also, more appropriately, is referred to as horizontal analysis. what has happened to this company over the past years. And this just looks at the most previous year divided by the current year, so that we can see, the current year divided by the most previous year in percentage format. So you can see here, if we go clear to 2017, sales from 2016 to 2017 increased by 125%. That's a huge increase in sales, obviously. Well, how is that possible? Well, the only way it's really possible is if the company bought somebody else. So if they are increasing the number of companies under the Coors umbrella, then obviously the sales numbers go up. So this year, this analysis is a little tricky because really we're not comparing apples to apples. But again, does give us some interesting perspective, if you will, of how the company is really changing from year to year. And of course, we can use some averages to look at what the percentage changes. And you can see in the last several years, we see that earnings per share from one year to the next is about a 95% change on average. But yet we see that last year, as a percentage of from one year to the next, dividends actually went down about 30%. Again, some of this analysis is a little trickier, but again, it gives us a picture of how things are changing. Likewise, if we look at the changes in assets, we can see that there's tremendous amount of assets. Remember, we talked about the change in sales and how that happened. Well, in 2016, assets increased by 183%, which means now the income in 2017 is going to reflect the increase in assets from the year before. So all of these things obviously connect. And in this case, percentage change in balance sheet is still the most previous year divided by the year before that in a percentage format. So again, this is just what we refer to as common size statement analysis.